Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5, one clear idea at a time. I'm your host, and in today's session, we're exploring an expert advisor called Acceleration Band Breakout. This strategy is built on Headley's acceleration bands, a volatility envelope that expands and contracts with the market's own range. Over the next few minutes, you'll learn how the bands are calculated, how the strategy decides when a genuine breakout has occurred, how a trend filter keeps it disciplined, and how it manages every trade with an ATR-based stop and target. Let's get started. Remember, this is educational information only. So what exactly does this expert advisor do? At its heart, Acceleration Band Breakout is a trend-following, volatility envelope breakout strategy. It's designed to run on a single time frame, whichever chart period you attach it to, and it can be applied to any symbol your broker offers, from major currency pairs to indices or metals. The engine behind it is Headley's acceleration bands, an indicator that draws an upper and a lower envelope around price along with a middle moving average. What makes these bands distinctive is that they are not a fixed width channel. Each band is built from every bar's own normalized range, so the envelope expands when the market becomes volatile and contracts when it calms down. In effect, the bands breathe with the market. This matters because it means the strategy only flags a breakout when price genuinely accelerates beyond what recent expansion can account for, rather than every time price wanders a little outside a static line. The strategy combines three ideas. First, a breakout condition. It waits for a candle to close beyond the upper or lower band, having closed inside on the previous bar. Second, a trend filter. The middle band must be sloping in the same direction as the breakout, which helps it skip counter-trend pokes through the envelope and reduce whipsaw. Third, disciplined risk control. Every trade uses an average true range stop loss and take profit, holds only one position at a time, and trades a fixed lot size. Who is this style suited to in an educational sense? It's aimed at traders who want to study systematic, rules-based trend following, where entries and exits are defined mechanically rather than by discretion. As always, this is for learning purposes and not a recommendation to trade any particular way. Let's walk through the mechanics step by step. The foundation of this expert advisor is a set of 3 acceleration bands. For every completed bar, the strategy measures a normalized range, taking the difference between the high and the low and dividing it by the average of the high and the low. That normalized range describes how much the bar moved relative to its own price. The upper band takes each bar's high, expands it by the BandFactor multiplied by that normalized range, and then smooths the result over the BandPeriod, which defaults to 20 bars. The lower band does the mirror image using each bar's low, and the middle band is simply a moving average of the closing price over the same window. Because the width comes from each bar's own range, the envelope widens when volatility rises and narrows when the market settles. Now for the entry logic. The strategy acts only once per bar, when the previous candle has fully closed, so it never reacts to a half-formed bar. It then checks for what we call a fresh cross. For a long signal, the strategy detects that the prior candle closed at or below the upper band, and the just completed candle closed above it. That combination means price has genuinely accelerated through the envelope, rather than simply drifting along outside it. The short signal is the exact mirror. The prior candle closed at or above the lower band, and the completed candle closed below it. A breakout alone is not enough. The strategy then applies a trend filter. It compares the middle band now against the middle band a few bars ago, using the slope bars setting, which defaults to 3. A long is allowed only when that middle band is sloping upward, and a short only when it is sloping downward. This keeps the strategy from chasing counter-trend pokes through the envelope. Finally, risk management. The strategy reads a 14-period average true range to gauge current volatility. For a long, the stop loss is placed 2 ATR below the entry and the take profit 3 ATR above, giving a reward to risk of 3 to 2. A short mirrors this, with the stop above and the target below. Only one position is held at a time, using a fixed lot size. Every trade is defined before it opens. Let's read the actual MetaTrader code the expert advisor runs. At the top are the input parameters you can adjust in the strategy tester. BandPeriod sets the smoothing length of the bands and defaults to 20. BandFactor controls how wide the envelope is, defaulting to 4. A larger value produces a wider envelope and fewer, stronger signals. Slope bars sets the lookback for the middle band trend filter. ATR period, the ATR stop multiple, and the ATR take profit multiple define the volatility stop and target, and lot sets the fixed position size. Below the inputs are the two signal conditions. The Boolean cross-up is true when the previous close was at or below the upper band, and the current close is above it. Cross-down is the mirror, when the previous close was at or above the lower band, and the current close is below it. Slope up and slope down compare the middle band now against its value slope bars ago. Now look at how the signal is routed. When cross-up and slope-up are both true, the strategy calls try-enter for a long. When cross-down and slope-down are both true, it calls try-enter for a short. Notice the two sides are distinct and symmetric. Inside try-enter, the stop and target are set from the ATR. For a long, the stop-loss sits at the entry minus the ATR stop multiple times ATR, and the take-profit at the entry plus the ATR take-profit multiple times ATR. For a short, those are flipped. Finally, trade.buy opens the long with that stop and target, and trade.sell opens the short. Two clean, mirrored branches. Now let's bring the strategy to life on a chart. On screen you can see a candlestick sequence with the 3 acceleration bands drawn over it. The blue lines above and below are the upper and lower bands, and the line running through the middle is the middle band, our trend filter. Watch how the bands gently widen and narrow as the candles move, breathing with volatility exactly as we described. We begin on the left in a quiet stretch. The first 3 candles drift sideways, closing comfortably inside the envelope, near the middle band. There is no fresh cross here and no reason to act, so the strategy simply waits and keeps measuring. This patience is the whole point. The strategy is looking for genuine acceleration, not ordinary noise. Then look at the 4th candle. Price pushes upward with a strong bullish body, and crucially, it closes above the upper acceleration band, while the candle before it closed inside. That is the fresh upside cross the strategy is built to detect. At the same moment, the middle band has turned higher over the last 3 bars, so the slope filter agrees. Both conditions are satisfied, and the buy entry marker appears. Notice the stop loss placed below the entry, at a distance of 2 ATR, and the take profit projected above at 3 ATR. The trade is fully defined before price moves another tick. Now follow the next few candles. Price continues to accelerate higher, riding just under and along the upper band as the envelope expands with the move. Each candle prints a higher close, and the middle band rises beneath, confirming the drift. A few bars later, price reaches the take profit target, and the long trade closes for a gain on this illustration. This is the ideal outcome the logic aims for: a clean breakout, a trend that agrees, and a defined exit. After the target is reached, watch the character of the market change. Price stalls near the highs, and a candle rolls over, closing back down. The buyers have lost momentum. Over the next 2 candles, price slides lower, and the middle band, which had been rising, flattens and begins to tilt downward. The envelope starts to shift with it. The strategy is now watching the lower band for a mirror image setup. Here comes the short. Look at the candle where price drops sharply and closes below the lower acceleration band, having closed inside it on the bar before. That is a fresh downside cross. And because the middle band is now sloping downward over the last 3 bars, the slope filter confirms a short rather than blocking it. The sell entry marker appears. This time the stop loss sits above the entry, again at 2 ATR, and the take profit projects below at 3 ATR. Symmetry in action. The short is simply the long turned upside down. From there, follow the decline candle by candle. Price keeps pressing lower, hugging the underside of the lower band as the envelope expands downward. Each close is weaker than the last, and the middle band continues to fall, keeping the trend filter on side. Finally, price reaches the lower take profit target, and the short trade closes on this illustration. Step back and notice the discipline in the whole sequence. In both trades, the strategy waited for a candle to actually close beyond the band, not merely touch it. In both, the middle band slope had to agree before anything opened. And in both, the stop and target were fixed by the average true range, giving that consistent reward to risk of 3 to 2. The strategy did nothing during the quiet stretch, and it took only the expansions that matched the prevailing drift. Of course, not every breakout follows through so neatly. In live markets, price can close back inside the band, and the stop loss can be reached instead. That is why every position carries a predefined stop, and why this remains educational information rather than a promise of any particular result. And that brings us to the end of our breakdown of the Acceleration Band Breakout Expert Advisor. Today we saw how price Headley's acceleration bands expand and contract with volatility, how the strategy waits for a candle to close beyond the upper or lower band for a fresh cross, how the middle band slope filter keeps entries aligned with the trend, and how every trade is defined by an ATR-based stop and take profit. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation to trade. Trading carries real risk, and losses do occur. If you found this walkthrough helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.